Hi, I'm Lindsay Alexander, and this is mybanktracker.com. Sometimes when checking your credit report, there are major concerns about the effects it will have on your credit and how often you should actually be doing this. Well, in the United States, there are three major credit bureaus: Experian, Equifax, and TransUnion. Each of these require you to see your credit report once every 12 months. You can look at each one just once a year, and they might have different data on your credit report, which makes the question about your report hard to decipher. But you really should monitor your credit more closely. For example, fraud, which can happen many ways, and you want to keep track of your statements just in case there are strange charges you know you didn't make. That way you know your credit is good to go. But then there's a possibility of someone stealing your social security number and even your mother's maiden name, which can lead them to open up different lines of credit in your name, in an entirely different state with a totally different bank. You may not even be aware of this unless you check your credit report as much as possible. Without incurring any fees, you can actually do this every 4 months. The trick is by rotating through each report bureau every year. If you know your spending is under control and you have no worries about ruining your own credit, it only makes sense to check your credit this way: 3 times a year, every 4 months. If you're working on improving your credit, or you can't figure out why lenders are telling you you have bad credit, it may be worth it to look at 2 to 3 reports all at once. That way you can compare your Equifax to your Experian to your TransUnion if you get all 3 at once. After all, one of them might be terribly wrong about something, and this is a good way to fix that. One question about credit report checks is, does this have any negative effect on my credit score? This comes from a minor misunderstanding about what affects your credit score. It's true that if you apply for multiple credit products at once, your potential lenders will do a hard pull on your credit report, and this can lower your score. It looks like you're desperate for money and not all that likely to pay a loan back because of this. However, looking at your own credit score is a soft pull, and it won't negatively affect your credit in the same way, even if you do 3 at once. I'm Lindsay Alexander with mybanktracker.com, and together we're going to build your finances and rebuild the world.